Well, hello everybody, this is Trade Formula. I want to make a quick video. If you're familiar with the recordings I've made before, you'll understand that I've kind of blocked off several growth patterns, as you can see here. The first one being 12x over a short period of time when resistance was broken. That we saw another growth pattern of about 14x based on the lowest low to the highest high. We had a long period of resistance and support emerged, and when that resistance was broken, our most recent, starting in December of 17 up until the beginning of January, that was about, I think, if memory serves me correctly, 16.5x. So we have 12, 14, 16.5x from lowest low to highest high. And I've been saying for a long time that we've seen a long period of support and resistance. And this is a little bit more of a falling wedge more than anything, downward channel, a lot more so than I had thought it would be. But I believe we're coming out of it right now as we're making higher highs than previously and higher lows than previously. Now, this is on the daily, and we can see that we've dipped well into oversold territory on the slow K right here. That's a low here. And the slow K here at about 25 cents, higher high than previously, higher low than previously. As you can see, slow K was maxed out here, and we are coming up from that, and I can see us breaking again. It's already been broken here, but I can see us breaking again this long-standing resistance line, and I believe it'll happen now that we've seen this emerge a little bit more right here, which is November 4th. In terms of fundamentals, I've also read that November 1st is going to be a big date for Mercury FX. That's don't quote me on that. That's hearsay. I remember reading that online. I don't have that particular link. I can share that if I find it. But I believe we're going to hit. Well, let's pull this in a little bit. I think we're going to have another similar pattern to what we've seen previously in these patterns before, and it's going to be beginning. Well, it's already started. I don't think we'll see a lower low than what we're previously at right now, and I believe that's going to coalesce into an end of year by $8. And now I don't know exactly when that's going to happen. These previous patterns have been relatively quick, within about 30 days of each other, right? This started on December 7th. It stopped on January 3rd. This one, let's see, started on April 20th and stopped on May 21st. So that's a little bit over a month. So if we have begun that process, then I think, if this is the lowest low right here at 37 cents, then it's quite conceivable that we could be seeing the end product around mid to late November. All right, let me pull this back in. And so, yeah, I think we're going to see a big period of growth. Once we break through this particular resistance, we're going to see a lot of volatility between then and now. If we move down to lower time frames, here's the 4-hour time frame. I would not buy in right this second. What I would do is really minimize my risk by waiting until we hit this green line again down here. I think that would be the ideal buy-in moment. And then just to kind of protect yourself, I would put a stop around 38 cents, 38.5 cents. That's what I have here. So if you're managing risk to reward and you're considering this, the risk to reward ratio is insane for $8. It's 275.5 risk to reward ratio to 1. So if you risked 1% of your total account by putting a buy here and a stop right here, you're doing really quite well for yourself when this takes off. So that would be my recommendation. If you really want to mitigate your risk entirely and you wanted to wait until, you could wait until it cleared this, wait for another dip, and then buy. But that's going to be a little difficult to time. So anyway, that's my assessment. I hope you all enjoyed this video. I'm going to post another trade idea of this specific risk to reward here so we can follow it. And yeah, good luck.